Imagine holding a small piece of cardboard in your hand, a depiction of a fire-breathing dragon from 1999. To a bystander, it's a childhood relic, but to a modern investor, that first edition shadowless Charizard is a liquid asset that recently fetched over $400,000 at auction. That is more than the median price of a home in many American cities. Welcome to the show. Today, we're diving into a phenomenon that has baffled traditional economists and sent auction houses into a frenzy. How did Pokémon cards transform from a schoolyard hobby into a legitimate, high-performing alternative investment class? We'll explore the nostalgia supercycle, the institutionalization of grading, and why your old binder in the attic might or might not be a goldmine. By the end of this episode, you'll understand the mechanics of the cardboard gold rush and whether this market is a sustainable frontier or a bubble waiting to burst. Let's start with the why. Why Pokémon and why now? To understand the current market, we have to look at the demographic shift. The children of the late 90s who traded cards during recess are now the high net worth professionals of the 2020s. This is the nostalgia supercycle. When these individuals reached a point of disposable income, they didn't just want to buy stocks or bonds, they wanted to reclaim their childhood. But they aren't just buying toys, they're buying blue-chip collectibles. However, nostalgia alone doesn't create a billion-dollar secondary market. The real game changer was the professionalization of scarcity. In the early days, a card was either good or bad. Today, companies like PSA and BGS have turned card condition into a rigorous science. A card that looks perfect to the naked eye might be a 9, while a 10 is worth 5 times as much. This grading system provides the one thing investors crave: standardized liquidity. It turned a hobby into a commodity market where a grade 10 Pikachu is as quantifiable as a share of Apple stock. Before we get into the heavy market data, if you're finding this deep dive into nerdomics fascinating, do us a quick favor. Hit that follow button and leave us a 5-star review on your favorite platform. It helps us keep the lights on and the insights coming. Now, back to the gold rush. You might be wondering, is this just a repeat of the 1630s tulip mania? Not exactly. Unlike many short-lived fads, Pokémon is the highest-grossing media franchise in history, beating out Star Wars, Marvel, and Mickey Mouse. This isn't just a hobby, it's a cultural pillar. During the 2020 global lockdowns, the market saw a perfect storm. People were stuck at home, stimulus checks were flowing, and high-profile influencers like Logan Paul brought box breaks to millions of viewers. Suddenly, opening a pack of cards became a high-stakes spectator sport. But here is the reality check, the cold water moment for every aspiring investor. The market is increasingly bifurcated. While trophy assets, those ultra-rare, vintage, high-grade cards, continue to hold or increase in value, the modern junk wax era is real. The Pokémon Company is printing more cards now than ever before. If you're buying mass-produced modern sets expecting a 1,000% return, you're likely holding a depreciating asset. The investment side of Pokémon is now a game of extreme gatekeeping, focusing on low pop counts, meaning cards where only a handful of perfect copies exist in the world. To wrap things up, let's look at the takeaway. Pokémon cards have become a modern investment tool because they sit at the intersection of 3 powerful forces: deep-seated nostalgia, a standardized grading economy, and a global brand that refuses to die. It's no longer about playing the game, it's about asset allocation. Whether you view it as a legitimate alternative to the S&P 500 or just a very expensive trip down memory lane, one thing is certain: the era of just a game is over. Thank you for spending your time with us today. Check your attics, consult a grading scale, but most importantly, remember that at the end of the day, it's still about the joy of the catch. We'll see you in the next episode.